Boy, that time flies when you're having fun, doesn't it, guys? Welcome back, welcome back. I think it's that time of day again here, folks. It's Tuesday evening. It's January the 22nd, 2019. My name is Joseph, and this is your nightly newsletter. And of course, I help traders just like you earn consistent, reliable profit each day in our trade room. We use a simple 3-step trading strategy, and my goal tonight is to find the most reliable, the best of the best trading opportunities, setting up my favorite markets that we'll trade together in our trade room. We've got crude oil, S&P, got some Nasdaq, some gold, and of course, we can't forget about that mighty euro. Got a lot to cover here for you guys and gals here tonight. Starting off tonight on the oil. Now, there's definitely no doubt about it. Had a nice big drop down on oil today. I don't think anybody's arguing with something happened this morning. This whole thing fell out of bed. Now, what is, I'm sure, a bit of a debate is who has control of this market. Now, if you're a client of mine, or if you tuned in last week on our nightly newsletter, you were waiting for this 1, 2, that beautiful nested 2-try reversal. And now we put the momentum back in the hands of those bulls. With that momentum in hands of the bulls now, right, they could run this thing all the way back up to retest those highs from last week. I've got a plan for that, but I'm also keeping an eye open to see if we fail and collapse all the way back down, because we've got that measured move that still hasn't been hit down here, just shy of that $52 a barrel. We've got both buying and maybe selling opportunities in store for us tomorrow. I'm going to break this down in just a moment. I like the long side, but I'd be foolish, right, to ignore that sell side, and we'll grab that on the oil here in just a moment. Another market that really got the screws taken to it here today. S&P really took a nosedive today as well. You can see we definitely got a bit of a pop higher here, but nothing compared to that momentum swing that we saw on the oil. So we might be looking for buying opportunities here on oil, but I can definitely see on this S&P a bear market into a trading range. And of course, that means we're focused on the 2-try failure pattern to sell back down. But the key here, though, is that rising support trend line. I'm going to show you how to trade around that trend line in just a moment for both buy and sell opportunities on the S&P for tomorrow. Over on the Nasdaq, of course, is very similar to its older sibling, the S&P. Older, maybe just bigger sibling, right? Might not be older. We obviously have a bear trend down here on the Nasdaq today. There's no questioning about that. The challenge, though, is we've got higher highs and higher lows. Don't confuse that with a trend reversal, because momentum isn't quite there yet. We call this a bear flag. There are 2 spots, trade a bear flag. 1 is above the channel. 2 is below the channel. No breakouts. Breakouts are the most unreliable trades you can take in these markets right now. So I'm going to walk you through 2 scenarios to sell this market without using breakouts to allow you to get a much better return on your money tomorrow on NASDAQ. And of course, we came for the gold here. Gold is a beautiful chart. There's a lot of things that we know about gold. We know the market is bullish. We know the triangle target back around that 1290 will be our big objective tomorrow. What we don't know, though, is which of these little hidden trend lines. Is it the reversal trend line? Is it the support trend line? Maybe it's both. But I'm going to put a plan together for you guys here in a moment on how to use a combination of this trading range, these hidden trend lines, and of course that big bull channel to hopefully give us a chance to buy nice and low tomorrow on the way back up to fill that triangle target on the yellow metal. And then of course we can't forget about the euro. How can we forget about that euro? The euro just keeps on rolling down the river here. Every time it goes up, we sell it back down. Got a bit of a trading range developing here, as you can see on the chart right now. Bear market, trading range, and of course, just like we talked about last week, I've got my eyes on some of these hidden trend lines overhead. We're going to use the 2-try rule along with those hidden trend lines to hopefully avoid selling low and make a nice easy profit, fading those bull breakouts on that euro tomorrow. It's got a great plan in store for you guys. We got 5 different markets to cover in tonight's newsletter. Turn the phone on silent, get out of those chat rooms, and right, let's get locked and loaded for tomorrow. Before we jump into the charts, though, and put this plan together for Wednesday's trading session. Of course, Monday was a holiday. Hope you guys enjoyed the holiday. Before we break this down, though, I want to make sure you never miss a video. To make sure you never miss a video, all the stuff we publish here every week, just head over to the blog. blog at sidewaysmarkets.com. I'll leave all the links on this in the YouTube channel, in the YouTube video as well. And make sure you join our mailing list. All I need is your name, your email address, and then hit that big subscribe now button. Don't forget to check your inbox. I'm going to send you information to your inbox. That way I can keep sending you emails every time I publish something new. I get some great new stuff coming on our YouTube channel as well. So make sure you join our mailing list. That way you never miss another beat. It's also important, remember too, we're also going to be in the trade room tomorrow morning, 8 o'clock Eastern time. We open up every morning. I want to make sure you're there with me. If you can't be there with me, the next best thing right below this video tonight, you'll see a big button that says download these charts. How easy is that? If you can't be with me tomorrow in the trade room, the next best thing is to grab all those charts from tonight's video and have them on your computer for tomorrow. There's a big button right below the video tonight on our blog at Sideways Markets to download all those charts. And please don't forget, if you have any questions about membership, about trial, about the trade room, the strategy, or anything in between, you can always drop me comments in the comment section below the video or pick up the phone and call me anytime in the office. I got a toll-free phone number in the upper right-hand corner. All right, as I said earlier, hope you guys had a great holiday. We're back in the action, though, here for a Tuesday edition of our nightly newsletter. And, of course, the most important thing first, let's get ready for tomorrow. Tomorrow's Wednesday, January 23rd. What's that calendar look like for tomorrow? Not a lot on the calendar, as you can see. It's pretty much a wide open day. As much as I love our friends to the north, I don't expect the retail sales number to be that big of a market moving event. I expect tomorrow to be more of the talk back and forth in the U.S. and China. We've got OPEC nations negotiating production cuts right now. And of course, let's not forget that our government still, in the U.S. at least, is still on lockdown right now. And I'm sure there's going to be some sort of explosive news event coming right around the corner, whether it be from OPEC or China, right, or the White House here in the U.S. Nothing on the schedule for tomorrow besides a bunch of minor stuff. So I do expect tomorrow to be a wide open day. And I would assume we're going to continue to get a lot of the same stuff we've seen over the past few weeks. If you're trading the U.S. session like I do every day, that time slice between 9:30 and 11:30 Eastern time has really been red hot lately. We're going to really focus on that time tomorrow morning. Hopefully I'm wrong. Hopefully we're just getting peppered with opportunities right from the start, 8 o'clock tomorrow. We open up at 8 o'clock Eastern time. Hopefully it just starts out strong. But what we've seen lately is between 9:30 and 11:30, that's where the big opportunities have been. So make sure you get there early. We'll get all prepped up tomorrow morning, but definitely don't force anything if we continue to see some sluggish markets. That time slot between 9:30 and 11:30 has been really good to us, and we're going to keep pushing those buttons for it right tomorrow morning. All right, let's jump right in. Good to see you guys this morning or this evening. Good to be back here after holiday. Let's jump right in and let's get some charts working up here for tonight. Tomorrow, of course, is Wednesday. Getting ready for Wednesday. 3 big clues on the chart tonight. This is oil. This is a 3,000 tick chart. And, of course, the first big clue is the bullish momentum. Now, I know what you're thinking. Joe, how can you look at this chart right now, see all of that movement down, and call this a bull market? Well, here's what I know. I know that after we saw that big tumble, I know, one, they missed their measured move, which really to me seems like there was something else out here instead of that larger measured move. Maybe it was just a 1, 2, 3 legs down and they stalled and reversed on it. That's the way I see it right now. That measured move might be unfinished business down there though, and we'll talk about that in just a moment. But for me, what it looks like right now is it looks like they ignored it. They couldn't get it. Here's the kicker though. The bears try once. The bears try twice, right? Big drop down. The bears want to keep it going. They try once. They try twice. And we talk about this all the time on this nightly newsletter. But if you're here for the first time, when we see the sellers in a bear trend try twice and fail on strength, what does that give us? That gives us that 1, 2, 3 reversal. I'm looking for opportunities to buy stuff like this all day long, right, on these markets. So we know the buyers now have taken control, really because the sellers now have tried a couple times and they failed to hold control. Now we see that big blast higher. The bulls have control right now, but here's a new problem. Now the problem is we're too high to buy right now. I don't want to buy up here. You're going to have more sellers coming in as this price goes higher. More sellers are going to try to sell going back down to retest that low. So I don't want to buy as the market's going higher. I want to buy as the market pulls back. I want to find levels of support. Second big clue on this chart is that support trend line. If I draw a trend line coming in off of this low, I've got 1, 2, 3 tests. Anytime I see 3 tests to a trend line, I always know I need to, at the very least, take it seriously, right? At the very best, I'll get a nice trade off of it. At the very least, I'm going to trade around it if I want to go through it. That trend line gives me a great level of support, right? Great level of support that I can use to buy that pullback off of. We're going to grab a look at that in more detail in a moment. But that leads me to the third clue, and that is the short covering rally. This is something that will likely take a rookie trader a couple years to learn, but whenever you see a big down move followed by a reversal, oftentimes the moves go right back to where they came from because all of the sellers who are holding open positions on the way lower and trailing their stops lower, they start getting bounced out of their positions. And if you're a seller and you're holding a trade short and you get stopped out on a trailing stop or whatever, you get out of your trade, what's going to happen? You're going to become a buyer and the market will rally higher. The reason why a short covering rally is so important for this particular scenario is that it's going to be pretty obvious on the chart because we're not going to get the deep pullback that we want right now. So if we do get the deep pullback, I've got a great plan for that. If we don't get the pullback because of this short covering rally going back higher, we know what our plan is going to be, and we're going to break that down in just a moment here as well. So 3 big clues. The momentum is on the side of the bulls. I want to buy at the support trend line, but I want to make sure I keep my eyes open, right, for this short covering rally. So let's play both sides of this. What if it goes up? What if it pulls back here for us? And what if it just keeps on going sideways? Let's zoom right in and let's get this party rolling here. Now, the first thing I want to look for is that pullback. See if I can get that pullback. Let's see if I can use that trend line as support. It's all about the entry pattern when we get that deep pullback. For example, one scenario I'm watching for right now is for what I call a 2-legged pullback, which is where we look for a trend line coming down right overhead as we pull back. If I can get that trend line drawn, then I can use that trend line now, right, as a level of support. I call this the 2LP, or the 2-legged pullback. And the reason why it's called a 2-legged pullback is because of the 2 legs during that significant pullback, right? We can use that trend line now, not as resistance anymore, but as support for that rally higher. That is usually about as low on the chart as you're going to be able to trade this. And again, it'll line up right off of that rising support trend line. But that's just one of my favorite patterns. Another one of my favorite patterns will come if we pull back to the moving average. Then what I'm looking for is something very similar to what we saw back here. Now, kind of watch how this ball bounces. We go down below the moving average. We come back to the moving average, and we see sellers try to sell off that moving average pullback. Now, the reason why that's so important is because just above the highs of that swing are where all the stops are. And now as those sellers fail, this market will shoot back up using what I call a seller failure pattern, or a failure setup. So kind of watch this ball bounces now. We do get the pullback lower. This brings us below the moving average. Once we get below the moving average, now, just like we saw before, we can look for that seller to try to sell off that moving average, right? The bears are going to try to run this thing back down to retest that low. They want to sell pullbacks just like we want to buy pullbacks, except the reality is they've got that rising support trend line right there. One of the easiest ways to give yourself a significant edge, at least in the short term, is to find the counter trend traders getting into trouble. So I already know there's going to be a rising support trend line there. That's keeping me from being a seller. I'm going to think about an area where I could buy right into those stops. If I can buy into those stops going right above that swing, that sets up up now for my first opportunity. We call that a failure pattern. And then, of course, as always, I don't want to chase after it. Hold on, wait and buy the pullback. We'll look for that pullback now. It almost always pulls back right to that same spot. We'll use the moving average. We'll use that rising support trend line as cover, right? And we'll get that pullback to the moving average for that second leg higher here. We called it a failure pattern, right, into a pullback pattern. Okay, so far we've talked about the 2LP, the two-legged pullback. We've talked about that failure pattern off the moving average, and we've talked about that pullback pattern. Now, I got to keep going on this. It's got a lot more to cover, and I want to teach you more about my other favorite patterns. But if you want a complete rundown of all my favorite setups, my favorite ways to draw channels, and literally hundreds of examples directly from our trade room, what I'll do is I'll put a free trading class in the upper right-hand corner of this video. No need to worry. Pause the video, follow that link. I'll also put a big red button for this link right below the video tonight on our blog. If you're here on the blog at Sideways Markets, follow the link in the upper right-hand corner, grab the big button below the video on the blog, and get registered for our new free trading class. That way, I can keep going on the newsletter, and I know that you'll get that deep dive so you know everything you need to really maximize our time together. So one more pattern though I want to talk about, again, while you grab that free class, right? I'm going to keep moving here. Now, what if we don't get that pullback? Again, this is a big short covering rally here, right? There's potential for a big short covering rally. So first of all, what would a short covering rally feel like? A short covering rally feels like the market is extremely aggressive, and you can tell because it won't pull back to the moving average. Right? So imagine now the market keeps going higher, but we never get a pullback. And after a while, I'm going to sit here going, what's going on? Why are buyers so aggressive? They're not even buying pullbacks, they're buying high. See, that doesn't happen in normal bull markets. That only happens when there's a bigger resource, there's a bigger problem. There's a bigger, what's the word here, right? There's a bigger force at play here. What's happening is the sellers who are holding on to open positions from earlier on in the day, they start getting out. And they're not going to be picky about selling or buying low, right? They're going to get out. They're going to get out. They're going to get out. So first of all, how will you know, right, this is a short covering rally? Because it's going to get real aggressive. It's not going to pull back to the moving average, right? It's just going to keep kind of grinding higher. It won't give us a deep pullback we're looking for. Now you know what it looks like and what it feels like. What's the best way to trade it? Well, the best way to trade a short covering rally is to look for traps, right? Trap, 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 trap. What I want to do is I want to find those prior swings. Again, these swings won't be very deep, right? They'll be relatively shallow swings. You're not going to get that deep pullback on a short covering rally. And when I see those swings, I'm going to wait for that opportunity to buy with a trap setup, right? Trap setups happen in all different market conditions. When it comes to a short covering rally, I know it's frustrating because the market will just keep on going higher. Don't buy high. Wait for those one or two opportunities, right, to buy that dip using a trap setup. And there's no better place to look for a trap than at the combination of a hidden channel along with a prior swing. And I'll tell you right now, we see lots of these patterns every day in our trade room. Trap low, bull market, at the low of that channel. You'd be foolish not to take me up on that offer for that free trading class, because that free trading class covers a lot of those patterns that we see every day in our trade room. You'll be very happy to have that tool in your toolbox. So that'll be the right kind of the fourth and final pattern: the two-legged pullbacks, the failures, the pullback patterns, right, and those trap patterns we're looking for here tomorrow. Now, one more thing though before we head off into the S&P abyss, right? How do we turn bearish, right? What would a market turn bearish? What would that look like? Well, first of all, we've got to get momentum back on the side of the sellers here. Okay, that's going to be the hard part here. For me to want to be a seller on this, it's too bullish to be a seller right now. I mean, look at all this altitude they're getting off of that moving average. For me to turn bearish, I'm going to have to see what I call the 1, 2, 3 reversal. It's just like the name suggests. It's not that clever, I have to admit. It's 1, right, strong move against. It's 1, strong move against. 2, pull back to the moving average. And 3 is that strong move off. Now, once we get that 1, 2, and 3, then we can start getting serious about looking for a sell. I'm going to use that support trend line now as resistance, and I'm going to look for that sell off of that trend line. Now, here's the key. It needs to be a strong move down, right? It's got to be a strong move lower. This has to be obvious that these bears are taking back control. Okay, what I'm not looking for is this. I'm not looking for a 1, 2, no, that's not going to be enough, right? It needs to be blammo, big, strong move through. Then I can use it, because then momentum will be turned right to the opposite side. Now momentum is back down to those bears. Now, if we don't get that pull back to that trend line, what's another option? Look for traps, right? If we don't get the pullback, look for traps. So if it's going lower, it's not pulling back far enough for us, I'll take my next best option. We talked about traps for the buyers. Now here's a trap for the sellers to finish off that measured move down around that 51.91 area. Once we get down to that 52 area, then it's timeout. We're going to wait and see, do we push through for continuation? In that case, another measured leg, or do we bounce and get a big reversal off that low? Only time will tell. And of course, tomorrow morning, don't forget, be with us tomorrow in the trade room, 8 o'clock Eastern time, and we're going to execute this plan together. Let's keep rolling. How about some S&P right now? S&P here, man, another bloodbath here today. There was definitely some big fish in the market this morning, sending these markets lower. I've got 3 big clues on the S&P here tonight. 1 is momentum, 2 is a trading range, and 3 is that support trend line. First things first, momentum is bearish here on the S&P. This is not a reversal. We haven't seen these sellers really fail yet. The S&P does not look nearly as bullish as the oil does. So we know we're definitely still on the bear side here. And the bear side, right, tells me I want to sell at resistance. Now, where could I find levels of resistance? Well, we also have a trading range here. And that trading range, if I take that trading range and I copy and paste it up, what does that give me? It gives me a level of resistance. Look closely at that level of resistance. What else does it line up to? A naked reversal line. We talk about this all the time on the newsletter, right? We're combining multiple levels, right? These are called confluence levels. We're putting multiple levels on top of each other because we know at each type of resistance level, you'll get a certain number of sellers. If you stack them all on top of each other, right, you get tons of bears waiting up top there. Now, the only problem is that it's a range. And so once we have a range, we know where our levels of resistance are. Now we need to use, because of that trading range, we want to use the 1, the 2, the failure pattern. Now that gives us an option to sell nice and high here. We'll talk about that in a moment, but there's one more clue here, and that is this very obvious support trend line that we have coming in off of this low. Now, clearly that's going to be an obstacle for us for the sellers. What I'd like to do then is use that trend line on the opposite side, right, as resistance. And this also might be a source of a possible reversal, because let's not forget, if these bears, right, if they try once and they try twice and they can't get this party to move below that trend line, this could also be a short covering rally, because we have the potential for the same basic fundamentals, the same basic psychology that we just talked about on the oil, right? So I love the fact that we're bearish. I love the fact that we're stacking some levels, right, on top of each other here, levels of confluence as we call them. And of course, all we need now is to find a way to safely, right, get into this trade right now. I think it's pretty easy to say we definitely want to be a seller right now, right? But how do we get into this thing, right, to trade this thing short? What if price goes up? What if it goes down? What if it goes sideways? Most important in the short term, we already have one try here for these buyers. So let's just mark this up right now. We do this together every day in the trade room, obviously, but right now with that trading range, here's one try now for these buyers to break out. Don't trade breakouts, by the way, especially counter trend breakouts. What I'm now going to look for is I'm going to look for those buyers now to try a second time. Now, once we get those buyers trying a second time, this is where timing is everything. Because what I want is I want to see a nice, strong red signal candle. We'll talk about signal candles tomorrow in the trade room, but I need that signal candle now to get me to give me an option to enter before we get to that trend line. Now, the reason why that's important is because I want to get in high enough so I'm not just selling right into that trend line. Because if I don't, then I'm going to have to wait and use that trend line on the opposite side. So 1, 2, signal candle sell. If I can't get in high enough, again, I'm going to use that confluence area. If we can't get in high enough up around those highs, then my next best objective is to get below it and use it as resistance. So 2 opportunities here right now, using the trading range and using the confluence levels right up overhead, right? I really like this whole 40 to 45 area here. We've got a lot of great confluence up there, and that'll give us some rock solid resistance. I've got to get the one try first, second try afterwards, and then once we have those buyers in, then we'll start looking to sell. Again, I want to make sure though that I'm taking my first profit target, and we'll talk about trade management based on volatility. I always use volatility for my trade management. We'll talk more about that in our free trading classes. But most important thing though is I've got to get that trade. I got to get the first piece of the puzzle off before we get to that trend line. If I can't, I'll skip the short before it and we'll look to sell it on the underbelly of that trend line. That'll be a lot easier trade sometimes, right? So if we can't thread the needle, so to speak, on the first option, right, we'll look for that second option. That should be a whole lot better for us. Now, one more clue here, right? One more important thing here now is, what if we go sideways, right? What if we go sideways here? What if we end up sitting here quietly on the S&P? Now what do we do here now? Well, again, that trend line's not going anywhere, right? That trend line is not going anywhere. So what I've got to do is, remember, if we have a trading range, it's going to be 1 try, it's going to be 2 try, and with the same basic strategy. Let them try once, let them try twice. We'll sell above the range, or we've got to use that trend line, right, as, again, not as support, but as resistance on the opposite side. Now, that covers the sideways movement. We know if it goes lower, what if it goes higher here, right? What's the plan then? This could easily, because of that trend line here, this could easily now jump. And if we see it jump, and again, it will jump because sellers just simply don't want to sell into that rising support trend line. If we do jump as we go higher here, again, it'll be a short covering rally. Look for strength. And then look for 2 basic setups. One is going to be a hidden channel pullback. Find that new channel and then buy off that low, right? We call these hidden channel pullbacks. And more importantly, you can line that up right with a trap low. Just like we talked about on oil, I want to make sure if it does lift off going higher, the short sellers who are in the market, they cover their positions, they get out, price rallies higher, right? If we do see these sellers here and they can't quite get to that trend line and we jump, again, watch for those prior swings, right? Let me draw it up a little bit steeper for us here. Watch for those prior swings, right? Watch those prior swings, find that new channel, and then we're going to wait for that pullback, right? Wait for that pullback and look for that trap low. Again, don't get frustrated if it rallies higher without you. It's part of the game. We don't want to chase after it. We want to wait for those traps. Now, also, don't forget, if we do end up back down to retest that low, make sure you take a timeout down here. Do we bounce up and do it again and sell high? Or do we go through that low and keep going for another measured leg, right? That's the question mark if we get back down to retest those lows here on the S&P. So again, quick recap here, right? If we go 1, 2, I've got my thread the needle sell into that failure, right? Into that breakout pullback, 1, 2 try failure. Or do we 1, 2 and go? If we do get the 1, 2 go on strength, that'll be your 1, 2, 3 reversal. Then we look for that new bull channel And again, we're looking to incorporate those trap patterns right at the low of that channel. And again, I'm going relatively quickly through this right now. If you want a much deeper dive into all of these setups, right, take me up on that offer. Grab that free trading course. It's in the upper right-hand corner, or grab that big red button below the video tonight on our blog at Sideways Markets and get registered. And I'll see you inside the member section of that free trading class. Let's keep going here from the S&P over to its little brother, little sister, little nephew, little cousin. I don't know what the heck it is, right? But it's sibling here, the Nasdaq here today. Another bloodbath, as you can see. We've got 3 basic clues on the Nasdaq today. Very similar to the S&P, but there's one big difference. Just with the S&P, we do have bear momentum. It's very, very clear these bears are in full control of this market. We've also got a bear flag, right? You'll notice it's a bull channel, but no, this is not a bull market. I hope you can see that. This is not a bull market. And this is exactly why I teach my clients every day in the trade room. Don't worry about higher highs and higher lows to define the trend. Worry about how the price reacts to the moving average. If you look back at oil, you can see how oil jumps off the moving average. Nasdaq's not quite there yet. We definitely know we are a bear market. And then, of course, we got one big clue, and that is the reversal line, right? That reversal line being all the way back up around that big round number at 6,700. Big round numbers do tend to be magnets when there's no other catalyst in the market. No major news tomorrow. Could easily be a time to go back to that 6,700 and drop us right back down again. So 3 big clues on the chart right now. Most important clue is we know we're bearish. We know we've got overhead levels of resistance we can use. The big hurdle is this flag, right? Flag patterns are typically going to give you 2 different ways to trade them. As we go lower, right, when a market is bearish, let's say, for example, right, bear market goes lower, we then see this bull channel. Now, the bull channel's not a reversal, right? It's just a bull channel. It's got higher highs and higher lows, but because of the overall momentum of the move lower, it's not a bull market, right? We saw what a bull market looked like on the oil earlier. This is not a bull market yet on the Nasdaq. Now, once we know we have that flag, now what I want to look for is I want to look for opportunities to sell at the high of the channel and at the low of the channel. Now, at the high of that channel, it's going to be a failure pattern. It'll try to hold the top and it will fail back down. We'll go up, they'll try to hold that top and it will fail back down. The next option is a strong move lower with a breakout pullback off of that low. So both of these options will include going just outside that channel. They both have their own benefits and their own challenges. So let's break that down right now, because that's ultimately what's going to make or break tomorrow's session here for us. Assuming that we don't just start rolling around and going sideways here on this Nasdaq, because the S&P is a range right now. This is a flag. That's the one big difference between the S&P and the Nasdaq here right now. First of all, let's talk about how price goes higher here. I'm going to take that trend line, I'm going to bring it up. That creates my flag, right? It's obviously a bear market. We don't have that jump that we saw on oil, which would call this a bull market. So what I'm looking to do now is I want to find a way to sell above that high. Now, what typically happens on flag patterns is we typically see the price go above it and then try to hold that pullback. And if you can see those buyers, if the buyers can hold that pullback and run, yes, that's definitely going to be a 1, 2, 3 reversal pattern. Momentum will definitely be bullish and will turn to being a buyer at that point. What I'm looking for here, though, is I'm looking for that pullback to fail, right? I want that pullback to fail, and I'm going to look to sell right back down into that channel. Okay, one of the strongest moves you're going to see is when a market overshoots the top of a channel. If it doesn't hold the top of that channel, it's going to smack right back down. Right? It'll snap right back down into that channel again. So again, we'll use a failure setup off the highs, right? And again, the key here is to make sure you get them above, right? Get it above that, right? Get it above that channel. Watch them hold the top of that channel, and then we can sell right into their stops. Now that's usually a pretty easy one, but it's not going to happen every time, right? It's a pretty specific setup, as you can see. The more reliable, maybe not more reliable, more common setup is going to be the strong move down. This is key. It's got to be a real strong move lower, because what that strong move lower will do is it'll give those odds to your side now and allow you to sell below, right, at that underbelly of that channel, right? So of course it's that two-try failure off the high and then into, whether you want to call it a breakout pullback or whatever you want to call it here, right, into that pullback setup using the underbelly of that channel. Now, another setup that will happen sometimes, we usually get that breakout pullback, but let's just say, for example, that we end up heading lower here, right? We're rallying higher, we go lower, and we don't get that pullback, right? If we don't get that pullback here, you've got to remember where the objective is, right? The goal for the sellers is to get back down to that 66.10 area. So as we start going lower, I don't want to chase after it. And anytime I'm running out of open space, I've got to look for what pattern again, guys? Traps, right? Trap patterns. So if you find yourself, and we're not pulling back here, and we keep going lower, wait for traps. We may not get the perfect pattern we're looking for. We may not get the sell up around the underbelly of that channel. But if I see this thing really making a nosedive here, I don't want to jump in and chase after it. I want to sell nice and high, as always, and sell with those trap patterns. So we're talking about failure patterns. We're talking about breakout pullbacks, talking about those trap patterns. Very, very simple patterns. And again, don't forget, this is just a breakdown of what we're looking for tomorrow. We are going to break this down and trade this together tomorrow morning in our trade room. You can learn all about our trading strategy by taking that free trading course in the upper right-hand corner, right? Also a big button bullet video tonight on our blog. And you can learn all about membership as part of that free trading class. Now, could this be a short covering rally for tomorrow on the Nasdaq? Oh, absolutely, right? Big move down. This could easily catch fire and run back higher again. All it takes is a whisper of U.S.-China trade talks going well, right? And this market will be burning, be ripping higher, as the kids say these days, right? And so, of course, we're looking for that short covering rally. How will you know it's a short covering rally? Because it won't pull back, right? It won't do this, it won't do that. No, it'll do this, right? It'll barely pull back. That moving average will be sitting over here and you'll be going, wait a second, why isn't it pulling back? Why isn't it pulling back? It's not pulling back because it's not buyers who are buying. It's the sellers back here who are the ones who are buying, as in they're getting out of their positions. Every time it goes higher, it hits a stop and it keeps going higher. And that's why it looks and feels so aggressive. So if this thing really jumps as it goes higher here now, right? If it really jumps as we go higher here, we're not going to be a bear market anymore, because now momentum is clearly bullish. Now we want to go out, find those swings. And again, right, we'll try to combine that hidden channel, right? That hidden channel with that trap, right? We'll find those hidden channels, we'll find those traps, and we'll buy the low of that channel, buying at support, buying below those prior swings, using those trap patterns as the market goes higher. The bulls want to get all the way back up to that 67.80. The bears, they want to get back down to retest that low. Do not try to predict this reversal. It's too bearish to want to buy it. Wait for the reversal to be a buyer. And again, be very careful selling too low here right now because of that flag pattern. Let's keep going here. How about some gold right now? Ooh, baby. I love this chart. There are three big clues on the chart here tonight for gold. One is momentum. It is bullish. Two is that trading range. Little tiny range right there we're talking about right there. And of course, three is that hidden trend line, right? What hidden trend line? That hidden trend line. That hidden trend line. We're going to break that down in just a moment. Now, before we break it down though, let's make sure you know the big picture here, right? Because here's the big picture, right? So this is what we're dealing with right now. If you recall, just a little rangy up there, right? Just little, right? Just a little bit of range up there, all around where? All around that 1920 area, right? Sorry, 1920, my dyslexia kicking in again, right? My 1290 area there. Is it a Okay, anyways, right, 1290 area, right? That's where we know these buyers want to go, right? They want to go back into that range where we've spent literally the entire year so far. They want to get back into that range. So that's their big goal. It's important to understand where that big goal is, at least for the short term, because the pendulum could swing and we could find ourselves back to 1300 right before the end of the week pretty easily, by the way. Now, we know we're bullish. When I'm bullish, what's the plan? Buy at support. Buy at support. Okay, so where would some support levels be? Let's get rid of the measured move levels. Let's clean this up so you know what we're looking at here. And where would my first support level be? First support levels coming off of those lows. Take the first two swings, draw that trend line. Now that creates an interesting trend line here. The problem with that trend line though is it doesn't really leave much room for a pullback. You know, I'm not going to argue with it. It's a level of support. What I'd really like to do though is use this as a hidden support level, right? I'm going to take a page out of the old school trading books. I can line it up as a channel, but more importantly though, I can expand out that channel by adding on a trend line just outside that channel. I call these hidden channels or hidden trend lines, right? That hidden trend line support is perfect for this because now it allows us to get a much deeper pullback, and deeper pullbacks are exactly what we're looking for. This is why I always tell people it's not so important that you get the analysis correct. It's important that you identify areas where you actually want to be trading, right? I want to trade that pullback. I want that deep pullback. I really don't want the shallow pullback. I want the deeper pullback. Okay, so that's one hidden trend line. What I really like though is this trend line coming down. Now we've talked about this a lot of times already, right? What is support becomes resistance. What was resistance becomes support. You know, we see this all the time, right? We go up, we pull back. They use prior areas of resistance as levels of support, right? I call these reversal lines. Anytime I have a trend line or a channel line or any level that I'm going to use on the opposite side, I call them reversal lines, right? I can use the reverse side of that trend line. This is an interesting way of looking at it because it's not your typical reversal line like I normally use. It's a dynamic reversal line, right? It's a sloped reversal line. It's a trend line, for crying out loud, right? So what I'm going to do is I'm going to use that trend line as a key level of support. And wow, look at that. What do we have? That magic word, right? Confluence again. Confluence again. Now we've got that trend line lined up with our hidden trend line. That confluence looks pretty good, but wait, there's one more level here. If I take this trading range, now, whenever I have a trading range, first question is, where's the range? Okay, there's the range. Second question is, where's the bias? It's a bull bias. What does a bull bias tell us when it comes to a range? Buy below the range. What do we like to use? We like to use what we call the range expansion. If I take the size of this range, size of that range, copy and paste it down, right? Literally copy, paste, Control C, Control V, put that support level right there. Okay, now that support level now becomes a great spot to look for that 1-2 failure pattern, right? That same failure, and we see lots of examples of them, right? Here's one right there. We go down, back up, down. Not huge, right? But a valid pattern, right? 1, 2, back up we go. And now it all comes together. I've got a bull market. I want to buy at support. One level of support is this, right? Is this range. Take the range, bring it down. That's one level of support. Another level of support is that resistance trend line. That'll be a level of support. But wait, there's more. There's a third one. I can take the channel. I can expand. Look at how beautiful that channel high looks at those wicks up there. I can take that channel and I can expand it, right? Like one of those motor homes, which I've actually never been in one of those things. They look pretty cool though, right? where they kind of like, expand out. You get like a swimming pool on top and everything. But the bottom line is, right, it kind of reminds you like one of those little motor coaches or whatever they're called. They're not called trailers anymore, right? I don't want to say that word, right? Because I'll offend somebody here tonight. But you know what I mean, right? Kind of pops up the side there, adds some more space, whatever. I honestly don't spend much time in mobile homes or trailers or coaches, whatever you want to call them, but they look pretty cool. So the bottom line is that's another one, right? That's another level of support, all stacking on top of each other, right? Beautiful area of confluence. So now that I got that out of my system, now let's look for the entry patterns here, right? Where's the entry patterns? It's a range, right? It's a range. So what I'm looking for is that failure pattern. I want to see us go down. I want to see these sellers try to sell off the moving average. And again, we're right into that area of confluence. We got all those levels stacking up here now. And now we can be a buyer going right back up into that trading range. If we really get lucky, we can look for that buy, that pullback, and do it again, right? That would really make me happy if I get the failure and then into that pullback, right? To try failure up. Don't chase after it, right? Don't chase after it up here. Wait for the pullback and buy that pullback as we rally back higher. Let's get that pullback off the high. Then we can leave that runner right up for that big triangle target up around that 1290 overhead. Now, what if we keep going higher here? If we keep going higher, this is where we've got to play one of two scenarios. First scenario is it rotates. If we see it go higher and pull back, I want to look for the low of that channel. Remember, there is a channel here, and I want to use that channel. I want to buy off the low of that channel, right? And again, kind of imagine now if we go higher here and then come back lower, almost a guarantee here, we're going to get that two-legged pullback, and we can use it on the opposite side, right? That 2LP. So if we do see that strong move up, but we can't get through the top of that channel, we'll look to buy the low of that channel. The next situation is going to be, though, if it doesn't roll at the top of that channel, right? If we just keep on pushing higher here and this thing rallies higher, if we see this thing really pushing to the top of that channel here, I don't want to buy high, I want to buy low. I'm going to go out, find that new hidden channel. You got it. And we'll try to get that trap right into that hidden channel for that last ditch effort before we get back up, right, to retest those triangle targets that we talked about earlier. Last thing, how do we turn bearish? What's a bear market look like? 1, 2, 3 reversal, right? 1, strong move against the trend. 2, pull back to the moving average. 3, strong move off the moving average. Remember, do not try to predict that move lower because you know what's going to happen, right? Guys like me and all the folks in my trade room are going to be waiting for that pattern to fail so we can buy right into those stops. Wait for it, get that strong move lower, then let's try to use that trend line along with that new hidden channel. You got it, right? And now to sell, again, looking for confluence of those areas of resistance. If I can stack a couple of different resistance levels on top of each other and find that hidden channel pullback pattern, man, oh man, it's gonna be difficult, right, not to make money on that setup. But for now, gotta wait for that deep pullback, gotta wait for those sellers to take back control. Remember, the bears want to get down to retest that low at 76. The buyers want to get all the way back up to that 1294. Will they get it? Only time will tell. And don't forget, tomorrow morning, we're going to have a front row seat there for that move on gold because we open up at 8 o'clock Eastern time just before the opening bell rings in the U.S. session for those gold traders. Last but not least here, over on the euro. The euro is relatively ugly, but man, oh man, this market just keeps on rotating. A very, very easy chart to trade right now on the euro if you can stomach the little bit of the lower volume and slower personality we're seeing right now. 3 big clues on the chart. 1 is that bear momentum. 2 is that trading range. And of course, 3, right, are those hidden trend lines. So we're going to kind of piggyback on the gold chart, and we'll use a lot of the same techniques that we used last week on the euro as well because, well, let's be honest, The euro is pretty much doing the exact same thing it did last week. We found a great opportunity to sell high on that euro last week, and we're hoping we're going to get a few more chances to do it here this week as well. So first things first is momentum is bearish here. With that bear momentum, right? With that bear momentum is clearly bearish overall. In fact, if you look at a longer term time frame, it's very long term bearish right now. What does a bear momentum tell me? It tells me sell high. It tells me sell at resistance. Now, where could I sell at resistance? Well, that brings in my trading range. I take my trading range, I copy and paste it down. That creates support. Copy and paste it up. That creates resistance. Yeah, these range expansions don't work a lick, do they? Yeah, look at these things, right? They turn right on the dime. They turn right on a dime there. It really is incredible when you learn how to draw these ranges correctly and then use those range expansions. I mean, I've got so many emails this weekend from you guys talking about range expansions from last week. Really great to see you guys taking this information and rolling with it. But most important thing right now, though, is we know we have levels of resistance here overhead. We also know we have levels of support down below. I want to sell at those levels of resistance. And we got one more clue here on the chart, and that is those hidden trend lines. Now, if I take the actual channel here, let's get that out of the way here, right? If I go, this is my big channel. It's a little bit tough to see. There we go, right? So there's the big channel. Now, remember, I talked about this last week. I draw channels a lot differently than you'll learn in most of the old school trading books. Instead of drawing a bear channel off the high, most people would draw the bear channel off the high. I have always found better results by drawing bear channels off the low. Just my personal opinion. You're more than welcome to follow the old school trading books, but these tend to work better in today's markets. Once I have that trend line, right? Once I have that trend line, then it's easy to see, right? There's a level right here. There's a level right here. And then more importantly, if you look up top here, right up there, where is it? There it is, right? I've linked it all the way up top there now. Eventually, that trend line will come into play. And I'm going to be happy that I've got it there on my charts already. So the bottom line is we know we're bearish. We know we have a channel. And of course, one of the easiest ways to get short is to look for confluence levels up near the high of that channel, right? So where are those confluence levels? We've got, again, confluence meaning stacking those levels of resistance on top of each other. If I take that range expansion, I line it up now with that, right, with that hidden trend line up there. This creates a beautiful area up here where I can sell the high of a big channel. I can also sell the resistance at the range expansion, right? Heck, for all I know, we might get a measured move here too, right? That could be a measured move there too as well if we get that nice rally higher. Bottom line is, what you've got to remember is, if we do get that pullback, right? If we do get that pullback, if the market does make that rally higher here, the big challenge is going to be that rising support trend line. Okay, that big challenge is the rising support trend line. So what I want to do is the same basic idea we used right earlier on, right? We want to get below it. If we do break higher, we want to get below it, right? And sell back down again. Same thing, get below it and sell back down again. If we get lucky, right? If we get lucky, and this goes back to the S&P we talked about earlier, if we get lucky here, we might be able to get a 1, 2, and a sell that's high enough so we're not selling right into that trend line. But if we can't thread that needle, that's fine by me. We'll try to get below it. We'll try to use it, and we'll try to sell right off of that trend line. A lot of this is repeating the same basic ideas that we had on previous charts, right? Mainly the S&P and that Nasdaq. So I do want to sell high. I don't want to sell low, right? I don't want to be selling down here. That's too low to be selling. I want to be selling high. The problem is in the euro, if we do end up rallying higher here, I've got that support trend line I'm going to have to take seriously. I want to get below it, use it as resistance, or, right, let's not forget, this thing could jump and reverse. Probably not going to happen, but could happen. If it does jump up and reverse, I'm going to mark up that swing, find that new channel, and we'll look to buy off of that low. Just be careful though. Be careful. This market hasn't been a bull market in quite some time. It's going to take more than just a strong push higher to reverse this trend. What I'd really like to do is get that trend line coming in, let them go up, get below it, sell it off that trend line. That'll be the easiest way to do it. That way you're not threading the needle up here, right? Trying to sell high. Again, you're more than welcome to, but it will be more difficult for rookie traders. What if we go sideways here, right? What if we don't pull back? What if this thing just sits here quietly? Then what do we do? Well, the good news is if it keeps going sideways, there won't be any concern about rising support trend lines. So that goes out the window. The next thing is 2-try rule. 1 try, 2 try. Let those buyers try once, let those buyers try twice, and we get the right signal candle. We'll talk more about signal candles in that free trading course I talked about, linked up in the top of the video here tonight. But once we get the proper signal, right, we can look to sell that sucker right back down in. If we go lower, be very careful down here. You do not want to sell as the market goes lower. How would you buy it? Nested 2-try. Strong move down, do not sell down here. We're way too low to sell, but could I buy this? I could with the right pattern. Let those bears try once, let those bears try twice. We call this a nested 2-try. And if you're wondering, yes, it is a variation of the major 2-try, and you'll learn all about that pattern and some. I do a lot of work with 2-try patterns in our trade room. It's included inside that free trading class. That will be the reliable buy off of that low. I'll bet you weren't expecting me to give you a counter trend opportunity. I'm not afraid of counter trend trades as long as I have the odds on my side. And to get the odds on my side, I'm going to wait for that strong move down, then let those bears try to continue, and then once those bears are starting to wave the white flag, bam, we're going to buy right into their stops, right, and try to send this price going back higher. Obviously, on a counter trend move like that, you're not trying to get rich, right? You're trying to take a quick profit target off, right? Try to hold the runner and squeeze that stop and try to squeeze out as much as you can as the market goes higher, right? Tighten, and then 1, 2, and just sell it right back down in, right? Just another day in the life of a price action trader. And guys, I've really enjoyed the process going over all of these setups for you guys tonight, but tomorrow is really where we're going to roll up our sleeves and get to work. I hope to see you there with me tomorrow, 8 o'clock Eastern time. We open up with all of our advanced members. You can learn more about membership on our website. You can get a free pass. Come out and join my trade room as a guest by grabbing our free trial. The links are in the description. They're in the upper right-hand corner. And boy, as always, guys, I am always having such great time with you guys every evening on this video newsletter. I gotta wrap up. I gotta rest. This weekend, I don't know about you guys, but my blood pressure is still sky high after those insane games this weekend. Oh my goodness. I said it last week. I was worried about the games this weekend, but man, oh man, an LA New England Super Bowl. I am stoked. But whew, man, those games were something to remember. Anyways, I'll get you guys out of here. I'm going to rest up for tomorrow morning. I'll see you tomorrow, 8 o'clock Eastern time. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.